The Finance Bill 2022 hasn't brought in any path-breaking tax amendments or tax announcements. The Finance Bill has not touched upon tax rates applicable to individuals, firms or companies. However, it has brought in a few important amendments which I would like to talk about. The first being the surcharge applicable to capital gains tax. Currently, only surcharge is restricted to 15% for the listed stocks, and for all other capital gains the surcharge can go as high as 37%. In order to streamline this anomaly, it has been now proposed that the surcharge on all capital gains applicable to long-term capital assets is now capped at 15%, in line with the listed stocks. This is extremely significant and very important amendment. The second tax amendment is relating to dividend and bonus stripping. Currently, the dividend stripping provisions are applicable to all securities as well as mutual fund units, while bonus stripping provisions are applicable only to mutual fund units. It is now proposed that the dividend and bonus stripping provisions would be equally applicable to all shares, securities and all units, and not just mutual fund units. So, this would now be applicable to units of REITs, units of InvITs and units of AIFs. This is again a very significant tax amendment. The another amendment is relating to the foreign dividends which is received by the domestic company. Currently, the tax rate applicable to such dividend is 15%, while the dividend received by a company from domestic companies, the tax rate is a normal tax rate which is much higher than 15%. Again, in order to bring the foreign dividends tax treatment at par with the domestic dividends, it is now proposed that this concessional rate of 15% needs to be removed, and therefore, the foreign dividends will also be taxed at a normal tax rate applicable to the receiving company. And finally, I would like to talk about the tax amendment relating to the cryptocurrency or crypto assets. It is now proposed that the transfer of any digital asset would be liable to tax at the rate of 30%. The only deduction which would be available would be the cost of acquiring such asset, but no other expense would be allowed. The second thing is the TDS at the rate of 1% would be applicable to such transaction, and if there is any loss which is incurred on this transaction, then that loss will not be allowed to be set off against any other head of income, or it will not be allowed to be carried forward. These are some of the key amendments which are brought about by the Finance Bill 2022. Thank you.